The content discussed on this podcast is for informational and educational purposes only and should not be construed as financial or mortgage advice. Always consult with a licensed professional before making any decisions regarding mortgages or financial matters. Welcome to the Canadian Mortgage Show. I'm your host, Alex Pang, along with my co-host, Alex Shanks. How you doing?
I'm doing pretty good here, Alex. Now, this is our first episode. I kind of want to talk to our viewers, everyone here, just to kind of tell them about what we're going to be doing here. Now, obviously, we're both mortgage brokers. We're in the real estate world. We're in the finance world. But really, we want to cut through that BS. We want to educate all the Canadians on all things mortgages and real estate. Now, we are mainly focused on BC, but we're going to be talking about stuff all across Canada because we know real estate in Ontario and BC is completely different as well. Now, our hope is going to be bringing on other guests. Like we want to be bringing in realtors. We want to bring in accountants. We want to bring in financial planners. We want to make sure everyone can get value from this. Not just a first-time home buyer, real estate investor, developers. Me and Alex, we have a lot of different people, a lot of different discussions that we want to bring to everyone. I know Alex has a really cool thing that he also wants to do as we get further along here. So I'm going to let him go over that.
Absolutely. As we build this along, we'd like to have a viewer and listener engagement. So we're going to have social media accounts set up, YouTube, Instagram, Facebook, what have you. And later on, we will have viewer listener mail. We'll ask you guys to post any questions, and then we'll go through some questions, and then we'll answer it on our recordings. So yeah, looking forward to that. We might have some future segments, poll questions. We'll see. We'll see where this takes us. So Alex, let's share the story about how we met each other and how this whole pod came to be. I'll let you start.
Well, I mean, didn't we we went into a basket, found a bunch of Alexes together and just said, "Hey, your name's Alex. Let's start a podcast together." It's a crazy world out there. Well, me and Alex, we met from TikTok social media stardom. We both were out on there, and I mean, I don't know about Alex, but I'm definitely more of an introvert. Posting that stuff out there, it was a big difference for me, but it's really helped me get out of my shell, and I've gotten to connect with so many people, and that's you right here, Alex. And we got to connect over some TikTok stuff and some social media, and we've just been kind of friends since then.
Absolutely. Yeah, the rise of TikTok came from COVID, right? Where I guess naturally both of us and a lot of people in our industry start posting on TikTok, Instagram, and such. I've come across some of your content and I'm like, oh, hey, this is pretty good stuff. I should follow him and maybe I should borrow it from mine. And 99% of social media is borrowed or repurposed, right?
Yep.
Yeah, and then we connected, we chatted. For those who don't know, Alex is on the Vancouver Island in Courtenay, and I'm in Vancouver. I'm in Surrey. So we've connected. There was one time where Alex came into town for, I believe, a conference, right? And so
Yep.
we connected, had coffee, and I've actually only met Alex once in person, and we stayed in touch over the years. When it came to our businesses, we were kind of in line where like, okay, we wanted to posting regularly on social media. You only get 30 seconds to a minute because people's attention span is so short, right? But we wanted to have more of a longer form conversation, like a 30 to 45-minute conversation, like how we're having lunch with people or having coffee with clients when you're just shooting the breeze.
Yeah, we want to bring like the stuff that's actually happening. Like today, we're going to be talking about the Bank of Canada dropping rates. But we also want to help people. Maybe it's a first-time home buyer, someone that's just trying to buy a house. We know that we talk to people all the time. Some people think they know everything or they've heard it. They may have never heard it, and we want to share that. We don't want to do any gatekeeping. Everything that we do, we both post on social media, and so there's nothing hidden that way. So our goal is to be able to help people that we're not even doing their mortgages for.
Yeah, absolutely. I mean, there's a lot of chatter in the marketplace. You don't know who to listen to. We're really here just to cut through all that and just say it like it is. This is how it's going to affect the everyday consumer. We're not trying to sell nothing. We're just here to, put people in a better place. So before we get going, like, how's your summer gone?
It's been busy. I've been, how many times? Me and my family, we have been in our trailer this summer alone, I think 21 times, almost every weekend for the last 6 weeks, we've just been camping, which has been awesome. But it's a lot of work with two kids.
Wow, you guys have an RV, right?
It's like a travel trailer. We pull it behind the truck. It's about
Right.
24 feet. We got bunk beds. We got our own bed. It's for people that can't see. I'm sitting down, but I'm also 6'7". I am a bit of a giant, and so the trailer is specifically shaped for my height.
Wow, wow. I know a lot of times people who buy trailers, like unless you use it all the time, there is like quite the cost involved, right? You know, depending on what you buy for a trailer, it could be what, 30 to 50 grand or even like more than 100,000, right? You got to get a
Yeah.
truck, and then if you have the space in front of your house to park it, if not, you got to pay storage fee and all that. And then when you do go, I mean, you got to fill up the propane and water and all that stuff, right? And then looking for RV places to park, I guess when you book ahead of time, I guess, right?
Yeah, I'm pretty lucky. Obviously, being on the island, we're definitely in a different area where I mean, you can go out camping at woods. You can kind of go over everywhere. We're obviously in Vancouver. I mean, you have to get pretty far away to even be able to camp. But
It,
what have you been doing for
well,
your summer?
um, I kind of joined a cult this year called pickleball.
Okay.
My goodness, I got into I played 30 years of volleyball and I kind of retired, getting old. It's a young person sport. Joints are getting, I'm hurting all the time, and the love of the game is kind of waning. Gone into coaching for a little bit because I wasn't uh, quite ready to give up the game. But even after a while, I wasn't enjoying coaching anymore. So I'm like, it's time to move on. No, being in business, I forced myself to take up golf, and I actually enjoy it quite well. And been taking lessons for the last couple of years, gotten better. But there is a cost to golf, and it's not cheap. And one of my friends actually got me into pickleball. I'm like, what is this? All I've heard is it's a senior sport, and it's kind of a tennis light kind of thing. But man, he got me into it and I'm addicted. I go like practically once a week now. Recruited all my friends. We have two WhatsApp groups about like, hey, are you going today? Are you going today? Are you going today? So now that summer is coming to an end and the sunlight is like it's dark at like 8 o'clock now, right? 8:30, 8 o'clock. We see the days where like if we want to continue playing, we have to go indoors and play in the community center. But yeah,
Yeah.
kind of a transitioning into the two sport life. Today we'll talk about Bank of Canada dropping rates leading up to it and the whole forecast moving forward. Because you know what, these days rate rates are the hot topic right now. And you know what? There's a strategy moving forward. What should we do, right? Like, should we go fixed or variable? We'll talk about that. And you know what? There might be some opportunities for those of you who got a mortgage in the 6% range late last year to save some money. All right, so we'll talk about that. Now, this is a few weeks old now. Inflation for July came in at 2.5%, down from 2% in June. I mean, the writing's on the wall. It pretty much spells it out that the Bank of Canada will cut rates, and they did, right? So not a huge surprise. Unemployment has creeped up over 6%. I mean, there, yeah, like even the States is they're not doing well right now either, right? Jerome Powell said in his announcement that yes, rate cuts will be coming, and we'll see on September 18th when they announce that we'll likely start seeing cuts in the States too.
I mean, the UK's already cut now. Like Canada was the first back before in June. We were the first nation to cut the rates, but yeah, the UK's already been cutting it now. And I'll tell you my honest thoughts, Alex, when it first happened is I didn't know if rates were going to come down in the first case. I was worried we had that hot spring market, and we knew that if housing demand was going to keep going, I was kind of worried that the Bank of Canada wasn't going to be able to do it. It's great seeing that real estate has kind of slowed down. Obviously, our jobs and everyone really wants real estate to be booming, but for the Bank of Canada to keep cutting them, it needs to be slow, and they've seen that. So that like gives them like the green light. All right, we can keep pressing down on this.
Yeah, I mean, it's kind of a double-edged sword. When there's bad news in the economy, it's good news for rates.
Exactly.
Yeah, you
It's
hear all
not
the some. Yeah, you hear a lot of the Twitter trolls will say, like, I want prices to go down, so I want rates to shoot up to the moon. I'm like, be careful what you wish for. Like, our economy will break, and even at like 6.5%, it wasn't like it was Siberia in our industry. Like nothing was really happening. And of course, back in the when rates were shooting up to the moon for us, you hear all the boomers say, "Well, back in the '80s, interest rates were 18% and da da da." I'm like, "Yes, mom and dad, but you bought your house for $110,000. Try six
Exactly.
percent on 1.5 million to 2 million in this part of the world, right?" And honestly, to borrow Ron Butler, our home prices are bat crazy, right? But yeah, like the fact that the economy is not doing so well is good for rates. And when they did actually finally cut, when was the first cut? The first cut was it June or July?
I think it was in June. I think we'd
Yeah,
have to go back and we'd
yeah.
have to check the date. We'll put it. We'll make sure that we note the correct.
So when they made the first cut in June and being the first country to do it in the G7, usually the government waits to the last minute to do it. They don't want to front run the market when the market actually wanted cuts to be, I mean, in October, right? And
Yeah.
they wanted to see consecutive quarters of recession or consistent decline in inflation, and we've already done that. The dumb part of them counting inflation in Canada, we count shelter costs in inflation. And it's kind of like the dog chasing the tail. Like you want inflation to come down, but you raise rates to do it. But by raising rates, that's inflationary. And in the States, they count inflation differently. They don't count shelter costs in their inflation numbers. So it's a weird way that we actually counted it in Canada.
Oh, it's a funny one, and yeah, I mean, the hard thing is we had a little bit there where inflation went up in April. There was a tick up, and that definitely put some fear in the market of like, oh, rate cuts aren't going to happen. And that's where I always tell people right now is like we got to take it month by month. We got the rate cut here in September. What's the next one going to look like? Is it guaranteed right now? I wouldn't say it's guaranteed, but I'd put the probability at a 99% right now, based on the data we have right now. I think we're going to keep cutting through the rest of 2024. And then it's like, well, what does 2025 look like?
Yeah. We all say that prediction is a crap business, and no one predicted the 5% increase of rates during COVID, right? Even during COVID, when rates were 1.5%, we're all telling our clients like, take advantage of this now because it's going to come back up, right? Eventually. And we all thought it was like, oh yeah, it'll probably settle down in the 3.5, 4% before
Exactly.
COVID. Little did we know, good old Tiff Macklem said rates will be low for a long, long time. Well, the long, long time was only 2 years, and rates
Oh,
shot up to the
less than
moon.
that.
I'm like, I guess it had to shoot up to like the pendulum had to swing to the other side for it to settle back down. And thankfully, the worst is over and rates are coming down. Now, the question is, how low will it go? So, all the economists' opinion, the market is penciling in rate cuts for every single announcement of the rest of the year. So we just had a rate cut. The Bank of Canada is going to meet two more times, and we're going to expect quarter point each time. So by the end of this year, another 0.5%, and we're forecasted to do four more cuts next year. So the total between now and then, another 1.5%. So by the end of it, we're thinking like we're seeing a variable rate now, probably around the low, yeah, like in the 4% range, the 4.5% range. So
At that time, yeah. Like right now, we're sitting at about 6%, depending
yeah,
on if you're looking at insured or a conventional mortgage. I like to just say, hey, let's sit around 6%. Prime rate's at 6.7 right now. Sorry, it's
yeah,
actually lower because we had our drop. We're even lower
yeah,
now on our prime rate.
yeah.
And
So it's
so,
6.45 now. So that would
yep,
mean, on a typical variable conventional mortgage, you're looking at 5.7, maybe 5.7, five point
yep,
nine, something like that. If
exactly.
we're anticipating another 1.5 years, sorry, 1.5% of rate cuts, yeah, this could very well be 4.25 to 4.5% by the end of 2025. So now everyone's talking to us. Is it now time to consider variable again? I don't know. What do you think, Alex?
I'll tell you the same thing as I told before. I'm going to give you all the numbers. I always sit down with every person, tell them this is what your fixed rate mortgage looks like, this is what your variable rate mortgage looks like. I'm not in the game of predictions. A lot of us did say, hey, you can withstand 20 rate increases if the Bank of Canada would have done 0.25 back in the start of 2022. We obviously know when they increase by a percent, all that math completely changes. And so that's where it's now helping people kind of be preventative. Obviously, we're helping people with penalties. A lot of people don't realize there is return policies on a mortgage. They just think I get the mortgage and I get to break it when rates come down. But we know, being in the industry, there's can be some substantial penalties, especially when you're looking at fixed rate mortgages. And that is the benefit of a variable mortgage is the penalty is going to be less in history. In the last little
Yeah.
bit, we've actually been higher on a variable than a fixed rate.
Yeah, we're in a weird point in time where historically variable is lower than fixed because as a borrower, you're taking on the risk, right? And you got compensated by the risk by having a lower rate. Historically, fixed rates are higher because you're essentially paying for the security, right? We're in a weird point in time right now where variable is about 1% more than a short term fixed. Now, the reason why I say short term is historically people have chosen 5-year fixed. Now, we're suggesting most people right now are suggesting don't go longer than 3 years because we're in a falling rate environment right now. And if you're in the year 4 to 5 range, by the time you hit year 4 to 5, and let's say you take a 5-year fix for like 4.5 or something like that, by the end of that, by year 4 or 5, that 4.5 could be way like higher than what it could be. It could be 3.99, 3.5%. So you know what? Either look at 3-year fixed or 5-year variable. So, I mean, we're not going to say here or there, but if you're taking 5-year variable, you kind of have to be okay with your rate being 1% more than a 3-year fix for now. So, but yeah, definitely worth a discussion now. I'm getting a lot more discussions now for variable. And the key thing too is there's difference in variables. Alex, do you want to explain the difference in variables, like variables and adjustable?
Well, I'm going to talk about here strategy that I've actually been doing with a lot of my clients, Alex, and you can maybe talk about what you've been doing for some of your clients, talking about that fixed and variable. When someone's taking that fixed rate, you're taking it to have that security like you talked about, but you're also potentially taking it at a higher rate today. With the variable, you're taking a higher premium right now. But the problem with that is, yes, it's higher right now, but what happens if rates actually drop? And that's where we're actually talking with clients right now about, well, a rate hold, we know that we can get it for anywhere from 90 to 120 days. We actually have a strategy in place where we can actually look at getting a variable rate with the whole plan to lock into a fixed rate mortgage. Because we know that we can track bond yields, those numbers go down, fixed rate mortgages go at the same time.
Mm.
And so I'll give you a little bit of sneak peek of what we're doing for clients. Let's say if someone's taking a $500,000 mortgage, we're going to break it into two different components. We're going to give them a $250,000 and a $250,000 mortgage. Each one is going to be a variable rate. And right now we're at that 5.75%. What we're actually planning is we're ideally hoping that fixed rate mortgages get down to 4%. Because I have a conversation. I said, hey, if you had a fixed rate mortgage at 4% right now, would you take that? And they're going to say, yes, I want that 4% rate, Alex. And that's where we can plan. Hey, we'll be able to look at if rates keep coming down. Now, the reason why we're breaking it into two different segments is so the person has options. Maybe they only want to lock in 250,000 and let the other one keep going. Where if it was a 500K mortgage, it's either you got to lock it all in or you have to let it all ride. And a lot of people are really liking that options. Or the other one, we're doing a portion of a fixed rate mortgage and then a portion of a variable rate. Giving people the flexibility is really what we're looking for right now.
Mm. Do a lot of banks do that? Allow you to split into portions?
Not every bank does it, and that's where you got to make sure you're working with the right person to have the lender options.
Yeah,
Very few banks do allow us to have those segmented portions, and that is why you want to work with someone that can show you all the different options.
yeah. Just Just plugging our business. We're licensed mortgage brokers, by the way. You can use us. Yeah. So, do you want to explain to the listeners what the bond market is? Because this Bank of Canada rate drop, does that affect fixed rates too?
Let's talk about that because I'll tell you, I get about 20 phone calls every single time the Bank of Canada drops a rate, and especially when someone takes a fixed rate mortgage.
Mm.
So we have in Canada, we have bond yields. This is what is tied to fixed rate mortgages. There's different bonds that can actually be tracked. There's 5 year bonds, there's 3 year bonds, there's 10 year bonds. There's people that's all they spend every single day is they're looking at what is the potential fixed rate mortgage. Now, on the variable side, you have the Bank of Canada overnight rate, and then you have the bank's prime rate where they get to lend, and that is where they make their profit. They get to borrow from the Bank of Canada at X amount, they get to lend it out from there. Now, when you take a fixed rate mortgage, your mortgage is based on the bond yields. So if the Bank of Canada continues to drop rates, your fixed rate mortgage does not drop the same way as a variable rate mortgage drops. And like you said, there's the different styles of a variable rate mortgage. There's so many nuances, and that's where people were stuck in like the static rate variable. And I mean, I don't want to go into this today. We'll talk about it another time, but people have 100-year amortizations right now. And that is going to be a big problem when the mortgages come up for renewal.
Yeah, for me, my mortgage is with Big Blue. I'm not going to say the name. And they are a hybrid where it's a fixed payment variable, but they don't allow the mortgage to be negatively amortizing, which a lot of some banks who have fixed payment variable, you got the strongly worded email during that time where you've hit the trigger rate, and a lot of in the industry really didn't know what a trigger rate was until it happened, because it was, some fine print on a contract that we never get to see. It's one of those when pigs fly moment. Well, I guess COVID happened and pigs flew. People hit trigger rates, and I don't even know where I'm going with this, but
The banks don't even know what to do with it. To be
yeah,
honest, I've
yeah,
talked to the ones
yeah,
your bank at least tried to keep you in line. The other ones, they honestly don't even know what to do. They're just
right.
kind of hoping, and not a hope. They know more information than us that rates are going to keep coming down,
Mm.
and that is why again it leads to our rates going to come down because they know that they need to clean up their books at the same time.
Exactly, exactly. You know what? Even during, now I remember I have a senior moment there, but now, like, yeah, at one point my amortization was, I was doing a calculator. My mortgage statement said 74 years, but based on the calculator I looked at, it was out to 99 years. I'm like, I'm not gonna look at this. I'm just gonna, like, be an ostrich, stick my head in the ground, and just hope it improves. Thankfully, the time is improving now where, what, I think we're coming back to reality. I mean, I'm sure it's still in the 50 years or 40 years, but probably a year and a half's time, it might be back to normal. So I think that's what a lot of people are hoping for. And you know what? Thankfully, it will happen. There will be relief. I mean, Canadians as a whole, especially people who took variable rate mortgages, we got took to the cleaners the last 2 years. Now, for those people who took fixed at 1.5, 2%, you guys were laughing, ha ha ha. Congratulations.
I got a mortgage at 1.5% here. I'm
Yeah,
one of them.
but your time will come. Everyone will pay the piper, right? So,
Yep.
they say there's this huge renewal cliff that's coming where a huge chunk of people are renewing in 2025 and 2026, because we all took out, either we bought, refinanced, or took on a new mortgage during COVID. Because why the heck not, right? 1.5, 2% money was free, essentially. And for us variable people, we've been slapped around the last couple of years. Time was tough, but for those with fixed, your day will come. And hopefully not too bad. By the time you guys renew, fixed rates will be lower, and the payment increase won't be as big. So
we
better
can
budget for it
we'll do
now.
a full I think we'll do a full podcast on that, an episode telling people what it's going to look like. We can break down some numbers, but why don't we talk about how people can actually save some money right now that actually took mortgages in the last year and a half,
Yeah.
because there's some people sitting with mortgages on a side at 6.5%. Like
Mm.
getting a mortgage from a bank on a 5 year term at 6%, like that is crazy. And that's even last year, talking to people, look at a 3 year, look at a 3 year. Yes, it's at a higher rate, but we now know there's some opportunities for people to save like tens of thousands of dollars. And I know that you were kind of checking out some of your clients there, Alex. So kind of tell me about what you're seeing there.
So, the good thing about our broker community is we collaborate, right? When there's opportunities to help save clients money, now that rates are coming down, um, probably near the latter half of last year, people who took mortgages, who had pre-sale completions, had to get a mortgage, or they, life circumstance where they had to refinance, mortgages were 6% and up, 6 to 6.5%. And yes, they were shorter terms, 2 or 3 year fixed. But now that short term fix is now down to the 4.99 range around there, high fours, low five, something like that. That's a good 1 to 1.5% difference. So is it worth it to break? Well, when rates come down, there is a penalty. So the penalty for a fixed will be interest rate differential. And not to confuse anything, it's a fancy word to say that it's going to be expensive. So we have a spreadsheet where we analyze the numbers, considering what the penalty would be at your 6% rate if you were to break it, and to take on a lower rate mortgage at 4.99, for instance. We worked it out, and I was looking at it this week, and I have about a good handful of clients in that bucket, and 7 out of 8 people would save money, anywhere from 4,000 to 15,000. So I'm going to be reaching out to them and say there's some savings opportunities there. So if you were had a mortgage that's in the 6+% range, contact your mortgage broker, contact your bank, or look into the breaking a mortgage, because the math in most cases makes sense. Even though you're paying a penalty, the savings that you'd be making for that 1.5% difference will be more than worth it.
The crazy thing is it's saving now as well, but it's actually banks make a lot of money on penalties. And right now, actual post-it rates, the way that banks lend out money is you have a post-it rate and then you also have a discounted rate. And the way that they're able to manipulate to actually get bigger penalties is they have very high post-it rates. And right now, those numbers are higher than they were back in 2022. And so right now, there's like a moment in time that people can still break their fixed rate mortgage and only pay 3 months interest. Where
Mm-hmm.
as those numbers start to come down, you get into the interest rate differential. And I'll tell you, in 2021, I paid $25,000 because I broke a mortgage at a higher rate to get to that lower rate. That
Mm,
is where the bank is going to say, hey, you owe me money. They don't care if you break your mortgage at a low rate to go to a high rate. They love that. They're perfectly fine with that. And so it's making sure someone's in your court, like not just looking at today's interest rate and the savings, but it's like, well, what if you need to sell your home in 2 years? What's going to happen to your costs that way?
mm-hmm. So it may not always work. It may not be worth it, but it's worth looking into. So contact your broker or your bank to investigate if it's worth breaking. So, Alex, I think our time is coming to an end. That was a pretty good first episode. What do you think?
I liked it, man. Like I said from the start, for me, it's just getting to chat with you is already a good time. And I hope that we can give some listeners some good stuff as well, help people along the way. But me and you just get to hang out on a weekly basis. So it's a win-win to me.
Okay, on behalf of my co host, Alex Shanks, I'm Alex Pang. Thanks for tuning in, and we'll see you on the next episode.
Now, if you enjoyed this episode, make sure to like and subscribe. If you're listening on Spotify or Apple, make sure to follow us. Please give us a 5-star rating. You can even send us an email because we want to know what you guys want to hear about. That's what we're here for. Reach out anytime.